Hey traders, I'm going to do a market update here on Sunday night, and let's just start with the dollar. It'll be important to see kind of where we close Friday. I still think big picture we're back to some levels that it matters, and directionally we were really trying to turn the corner. I mean, we've been talking about for a while. This is the dollar index futures, the daily chart. I guess we can back up to the weekly even. But I've been talking about for a while, this is the long-term uptrend that started here back in 2014. And without going into all the specifics of why this is an uptrend, but we have a thing called our TMS, which is our proprietary trend following system. And this has been holding trend for almost 3 years now. This higher low on the weekly level matters. It's right where the market is. But typically when you see, I can even draw that a little bit differently, be more specific. But when you see this type of uptrend, all right, this is another breakout from this consolidation move we had. You see this tight range right here. All right, so this was the start of the breakout. You broke above this high. So this is a long-term uptrend, and this was the first leg up, and this is the first significant pullback we had. Now, my traders know we focus on an 8.6 wave frequency. That's one of the wave structures that's consistent really across any time frame. The global business cycle is 8.6 years. The last peak was 2015. The year before that was 2007. And anyway, this is just a wave, a cyclical structure that exists. And what's interesting is you've had 1, 2, 3, 4, 5, 6, call it 6 to 7 weeks pullback. So here we're coming into the 7th or 8th week. I mean, it's an 8.6 frequency. So whether you want to count from here or you want to count from here, point is that here we are. We started to move higher. You should get a higher low at or near this blue line, which is the 30-week moving average. So I'm looking for the dollar to hold somewhere in this area. Specifically, we've been really keying off of that higher low, which is around 99.5. Okay, guys, and then when you go to the dollar or the daily chart, here's that same level. So we know that in our model, when you break the bands, you may or may not get a move back to the 200 or the pi cycle. But the fact that this higher low is still here, this was the breakout high, whether you want to draw it from here across or from here across. All right, and then the 109 level in the euro, it's all the same area. So it's not really one specific level, it's an area. But I still think you're going to get a higher low here in front of 99 on dollar index. And then on the euro, very similar, right? Just the inverse. The last major prominent lower high was over here around in front of 109. Probably going to get the same thing here in front of 109. So this has been an intermediate term uptrend all of 2017. But I think you're at a crossroads now where, and that's been our call for a while, that the intermediate term has a good chance of rolling back over. So we've been working a core short into this area. We have a lot of signals intraday and over the intermediate term. But anyway, we'll be sellers this week again on the euro. And a couple other markets. I think that kind of covers the dollar. I mean, the yen. Look, the yen's had a good move up. You should expect a pullback, which we've had after this type of move. All right, we've retraced about halfway, or the wall here, halfway up this wall. The bulls built this wall up about halfway. We've been looking for a higher low on dollar yen, big picture, longer term, and that's kind of what's been It's been taking place lately. All right, here's the daily chart. Strong, very powerful, momentous move up. We're holding what we call the lower bands down here in front of 112. Kind of a similar trade. I think you're going to get a higher low here in the dollar versus the yen. As far as stocks go, well, let's start with the bond market first, because I'm a bond guy. You can even start on the monthly level. This has been the move lower back half of last year. Technically, I can't call this a long-term bear market till we really get a monthly close above at least 146.30 in long bonds, which basically holds this, break these bands, and then we're gonna have a break of this entire move up, which has been in place really from a long time, guys. I mean, you can draw this a lot of different ways, right? But this whole area, this is the trend. And if and when you break this, that to me is going to really confirm a longer term bear market. And for me, long term, you gotta talk to me about the weekly and the monthly chart. All right, so that's the monthly level. Here we go to the weekly chart. Weekly chart's broken down. This was the start of it. This was where the heavy selling was back in November. Again, though, here's our pi cycle. You kind of got to break me back below pi, which is also showing me a long-term bear market. If you show me a weekly chart and you're above the pi cycle, which is this dashed line, that's still a long-term uptrend. So we're starting to see the signs of the market breaking down in bonds. Here's the pi cycle breaking back in November. And this is the time frame that we've been playing. We were short, been reshorting up into this latest bounce. Alright, we were long here, small long, flipped, went short, covered, and been fading this ever since. The bond market has refused to rally, even with gold rallying, which had a high correlation bonds and golds for a while. So the bond market is telling you that growth is accelerating. And then along those lines of growth accelerating, you have stocks that look good. Go to the weekly chart. Just nothing but a bull market here. Right? Long-term uptrend. US stocks very, very strong. Whether you look at the Dow, the Nasdaq's actually the strongest. But you cannot be shorting this market, guys. There's no way. You want to be buyers of dips. Alright, so we've been buying, playing this from the long side. This is a nice setup here, Friday. Nice swing line setup. I don't know if you guys can see that. You just follow the previous day's lower highs. Boom, take out the previous candle. Long, stop below the low. Previous day candle's low. Alright. That's a nice swing line setup in the model. Kind of hard to see. Anyhow. Boom, move up. Nice swing line setup. Just follow those lows. Boom. Long. This is going to new highs. Alright, so still bullish stocks. And then, I don't know, a couple other markets. I mean, gold's testing. This is a big level here at pi. I've been saying 1226, 1225. You also have these weekly lows that come in here right here. So this whole area between 1225 and 1240, you also have the 200-day up here. It's going to be very difficult for the gold market to get above these highs. But definitely been in a bullish posture all year. But don't forget, this was a nice move down, so we were expecting a bounce, and now you're about halfway. So this is where you want to be short covering, thinking about reshorting, and that's essentially what we've been doing here. Just been slowly, patiently building a core short. Alright. So that's pretty much it, guys, I guess, for tonight. Enjoy the Super Bowl. We'll talk to you guys in the morning.